Welcome to the Skilled MBA Finance Case Study Series. Today's focus is on environmental, social, and governance (ESG) investing, an approach that integrates ethical considerations into financial decision-making. Advisors must navigate a delicate balance, aligning client values with investment performance. This requires a deep understanding of ESG principles, fund categories, and how to evaluate performance across environmental impact, social responsibility, and governance standards. By effectively integrating ESG into client portfolios, advisors not only manage risk and return, but also foster long-term, sustainable value creation. Understanding ESG fundamentals is crucial for financial advisors. ESG investing focuses on environmental, social, and governance criteria, offering diverse fund categories. Advisors must grasp these principles to align investments with client values and financial goals. This knowledge forms the foundation for effective ESG integration into portfolios, ensuring informed decision-making and client satisfaction. Manuela Chavez, with over 15 years in wealth management, expertly manages a diverse client portfolio. Her reputation for trust-based relationships is key as she addresses the growing client interest in environmental, social, and governance investment options. Her experience spans young professionals to institutional investors, making her adept at integrating environmental, social, and governance strategies into varied portfolios. Environmental, social, and governance funds focus on responsible investing by applying exclusionary screens to avoid controversial sectors like tobacco and fossil fuels. They select best-in-class companies excelling in environmental, social, and governance performance and offer thematic funds targeting sustainability themes like clean energy. Impact investing aims for measurable social or environmental outcomes, aligning financial returns with ethical goals. Environmental, social, and governance investing in India is surging, with assets under management reaching 12,300 crore rupees in 2023. This reflects a 38% annual growth rate, highlighting strong investor interest. Currently, 27 dedicated environmental, social, and governance funds offer diverse opportunities, aligning financial goals with sustainable development. Environmental, social, and governance funds, compared to traditional mutual funds, often exhibit lower volatility, appealing to risk-conscious investors. Although traditional funds may provide slightly higher returns, environmental, social, and governance funds offer a balanced approach with their focus on sustainable practices. This makes them an attractive option for those prioritizing stability and ethical investment. ESG funds often prioritize technology and healthcare sectors, with a notable emphasis on renewable energy. They typically avoid fossil fuels, tobacco, and defense industries, focusing instead on sustainable supply chains. Manuela should account for these sector biases to ensure diversified portfolios for clients. Environmental, social, and governance investing faces challenges like inconsistent scoring due to varying methodologies among ratings providers. Greenwashing is a risk, where companies exaggerate environmental credentials. Transparency issues arise from limited disclosure of holdings and impact measurement. Additionally, excluding high-performing sectors can lead to performance trade-offs, impacting financial returns. Conduct comprehensive interviews to identify which environmental, social, and governance factors matter most to clients. Determine if they prioritize values alignment, financial returns, or a balance. Define success metrics beyond financial returns, like carbon reduction. Clearly communicate potential performance implications and schedule regular reviews as client priorities and environmental, social, and governance options evolve. Advisors must align environmental, social, and governance strategies with client values and risk profiles, ensuring tailored solutions. Trustworthy environmental, social, and governance rating systems and research providers are crucial for objective analysis. Balancing proactive client education with responding to preferences is key. Understanding whether environmental, social, and governance investing is a lasting trend or temporary is essential for strategic planning. India's regulatory landscape for environmental, social, and governance is evolving. Securities and Exchange Board of India mandates business responsibility and sustainability reporting for the top 1,000 companies from fiscal year 2022-23. New guidelines classify environmental, social, and governance funds to curb greenwashing. Corporate governance norms now emphasize board independence and whistleblower policies. National climate policies shape corporate disclosures and investment opportunities, aligning with global environmental, social, and governance standards. A practical approach to ESG integration involves educating clients to enhance their understanding, assessing their values and objectives, and conducting thorough ESG fund analysis. integrating ESG elements into existing portfolios and regularly monitoring performance and impact metrics ensures a gradual, phased approach, helping clients become comfortable with ESG before making significant portfolio adjustments. The future of environmental, social, and governance investing is shaped by standardized metrics, enhancing comparability and clarity. Artificial intelligence and big data analytics offer deeper insights into environmental, social, and governance performance, surpassing self-reported data. Social factors, such as worker conditions and human rights, are gaining prominence. Environmental, social, and governance analysis is increasingly integrated into all investment types, becoming a standard practice. Financial advisors should develop environmental, social, and governance expertise by understanding principles, metrics, and fund evaluation methodologies. Establish clear processes to align client values with environmental, social, and governance strategies. Practice due diligence by verifying environmental, social, and governance claims beyond marketing. Balance expectations between values alignment and financial performance. Stay informed on regulatory changes in India and document client preferences and decisions meticulously. Thank you for joining us at Skilled MBA. For further insights and professional development, connect with Skilled MBA. Reach us at जोड़918553000795 or support@skilledumber.com. Explore our resources at https://skilledumber.com/ for case studies and investment insights.